Silver Dave here. What have I been buying right before the election? Well, we're a few days out and let's find out. I'm quite happy to talk about this today because I went to one of my local coin shops and they were having a sale right before the US elections. I guess people are a little bit scared. They want to cash in on the gains they've made recently. So there was an influx of old Edwardian sovereigns. This is from 1909 and I picked these up at spot. Melt value for these semi-numismatic coins. Am I happy? Yeah, I'm really happy. These are my first sovereigns. And then I picked up 4 more of these semi-numismatic Swiss gold coins. I ordered them online. These were my normal suppliers. They're called Phil Oro. They're very good. They ship overnight almost, and everything's insured through their shipping. And they have good prices. These coins are cheap. They are at spot. They're the same price as, they're a little bit cheaper than even the Krugerrand. So they're a little bit over spot. But since I am in Switzerland, these coins are relatively well known and well accepted as fractional gold, and you can buy and sell them even at banks. So that's my buy before the elections. And then I also completed my 20 ounces of Philharmonics. So right now I have a full bottle of Philharmonics. So I'm going to move on to look for my next stacking, to stack another tube. The way I like to do it is I like bullion. I know I like bullion because of their liquidity and all these other aspects related to it. I like silver bullion coins specifically because they're relatively cheap to buy. They're not, you don't need to get a full bottle of silver bullion coins. You're looking at maybe 500, you're looking at $480 to $500, right? 500 to 550, except for silver eagles, which have a really, really high premium at the moment. But these coins, they're relatively liquid. I like having at least one tube of either from most countries. So I'm trying to get one tube of Philharmonic. I already have one tube of Eagles. I have one tube of Naples. I have one tube of Fiji Takus. And so I'm looking for my next tube now. I'll start stacking my next bullion tube most likely after the elections, since I'm pretty much done with what I want to stack for this year. I might be tempted to pick up a tube of Silver Eagles despite the premiums they have, because 2020 has been a relatively special year and it's the last year they're making Eagles. So at $600, it's pricey. I'm not gonna say it's not pricey, but I can afford it. I can afford to pay the premium, and I might just pay the premium for Eagles. What else might I pick up? Well, I'm picking up more platinum. So I got this, this 1 ounce Lunar Series platinum coin. And yes, the Lunar Series has a premium on it, but platinum prices are so low that even with a premium, it's a ridiculously good buy at the moment. Gold and silver, they literally adjusted their prices yesterday, and which was, I think, Thursday, 29th of October. You had both prices slide a bit, and now they're trading flat. Platinum, it didn't do that. It just stayed flat. It just stayed flat during that whole period. What I think is happening with platinum, and it's interesting that despite the turmoil, everybody has been jumping into gold and silver as the hedge against inflation. And they've been also looking at palladium. They're like, yeah, it's going up. But platinum, relative to all these other precious metals, is completely undervalued. There's no reason for platinum to be at $800. I don't see it going lower, because right now, every time there's a gold or silver correction, you don't see a platinum correction on the same level as gold and silver. Platinum pretty much at this moment at $850 is just flat, right? Anytime it goes below $800, it bounces back immediately. So what that tells me is that You know, nobody is the cost of replacement for platinum cannot be lower than $800 an ounce. And that's why it is so cheap. It means that every time you buy platinum, you're pretty much sure that you're not going to lose money. That's why you buy investments, right? That's why you buy gold and silver as a safe haven. So for me, I like this because it gives me variety. It gives me something to collect. I've always liked collecting things, whether it's Pokemon cards, whether it's Yu-Gi-Oh cards, Magic cards, and the reason why I like Bullion is because it's sort of like Pokemon for adults, and I can just buy Bullion from different countries and I have a variety of really nice looking coins, and it's really enjoyable. And I like fractional gold, especially these old ones, because there's no premium on them. They're selling at gold prices for historical items. I mean, this is a gold sovereign back when the British pound was a world reserve currency. You know, it tells you the history of money. It's part of the history of money, and it played a major role in the Second World War in financing the defense against the Axis powers. So, I mean, for me, it's unthinkable why this stuff, the semi-numismatic stuff, is trading at such a low price. I think it is trading at such a low price because it's not glamorous. You know, things that are glamorous are cool, have a premium. Things that are not cool don't have a premium. Platinum has not been cool for a long time. Palladium became super cool because of the bull run, but I think 2021 might be the bull run for platinum. Also for gold, also for silver, to different degrees. I think platinum has a lot more upside potential than downside potential. Why didn't I buy platinum before? Well, it's hard to source platinum. I don't know if you've tried buying platinum, but before the pandemic, it was hard to buy. During, it was hard to buy. I've contacted quite a few dealers. Either they're out of platinum coins. Every time they come up, they don't buy a lot of platinum coins. There's not so much supply. And when you try to buy either bars or coins, they come in 1 kilo bars. And I don't want to plop a kilo for platinum. I want 1 ounce because it's something I can afford month to month. Plotting down 1 kilo of platinum is quite risky. So what did I buy before the election, and should you follow what I did? I would say you need to be careful a little bit. I bought roughly, how much is this? 1,000, 2,000. I bought almost $3,000 worth of gold and silver, right? And platinum. This is a fraction of my cash reserves. I still have 20,000 on the side waiting to be invested and to buy up gold and silver. What do I think will happen in a year? I think once all the quantitative easing and fiscal stimulus has been set for different countries, for the ECB, for the European Union, for the Federal Reserve, for the Swiss National Bank, once they've decided to open the taps, we'll see a rise in precious metal prices. From that point, until that point, you're unsure what's going to happen to metals and what's going to happen to precious metals. What I think might happen at the election, this will not be popular, is that we are going to see a crash of everything. Right after the election, we are going to see a crash of everything. A lot of things will go down, and if at that moment you have cash on hand, I think that's the time to jump in, right? I don't think it's going to crash just because of the election. I think there's going to be a crash of everything because if you look at valuation of stocks, they are completely insanely valued. They have no generation of value. The only returns you're getting are capital gains. So you have, in order to generate more cash flow for yourself, you need to sell stock. You don't have flexibility with that. If you were holding bonds, I think like if you bought bonds before they started lowering the interest rates, you did really well because bond prices actually move in reverse to the interest rate. So bonds have been flying up in terms of pricing. And I believe a lot of people exited bonds. So the if they exit bonds, then the Federal Reserve has to buy more bonds to keep the interest rate low. That's how QE works, right? And it gives more cash injection. Where does that cash go? We don't know. Banks have it in their reserves. They might lend it out. They might not lend it out. That's another question. But what will happen after the election, I think there's a sentiment issue, is that people essentially right now are not, they're making gains, but they're not happy with essentially the outlook for stocks and the fundamental underlying aspects for many of these stock companies. And I think over the last few days, we've seen the stock market go down 2% per day, 1% per day. And I think it's absolutely normal because people are selling off before the election. And why do I think gold and silver will crash? Because when you have a stock sell-off and when you have a market meltdown, the most expensive thing during that period is not precious metals. It doesn't go up immediately. What happens is, the first thing that happens is people sell their stocks for dollars, okay? When there is a market correction, people will start selling. If they panic sell, you're going to see in the short term for around 2 to 3 weeks, the dollar shoot up. This happened at every single meltdown, is that people flee the stock market and assets to go into the dollar. Some people flee precious metals, some people flee other things. When they do that and when there is a meltdown, the only solution to give people confidence again is for central banks and governments to provide fiscal and monetary stimulus to bring those prices back up. So people are like, okay, everything's in the green, they're going to back us, they're going to support us, there's some trust, we can buy again. During that process, they devalue the currency. So everybody goes out, they exit the stock market, they're not buying assets, they're not investing, they're not spending, they're just holding the dollar. It's really, actually, that's a really bad situation that government wants to avoid because it hurts the economy. When you hold a lot of savings and the interest rates are super low already, it makes it so that the economy needs to restart. So money is a fuel for the economy. People have to spend, right? And people have to consume. We live in such an over-leveraged economy that if you stop consuming, then people selling businesses go bust, and it makes a knock-on effect in the whole economy, and people go out of work. Let's say you stop spending, you start hoarding money, so you're no longer going to the grocery stores, you're not going to buy at the deli your sandwich. Suddenly the deli goes out of business, they have to fire their workers start hoarding money. It makes a knock-on effect. It's pretty much clear that we don't know how to measure the exact extent. We have an idea, they have models, but the general principle is pretty much accepted that when people start hoarding money and they start not spending, it tends to lead on to this specific knock-on effect. The reason why governments want to have people restarting is because having a lot of people hoarding money and a lot of unemployment is not great for the economy. It's not. People don't get back to their lives, and that's when you have problems. You have societal problems, and they don't want societal problems. They want to make money. So obviously, they will try to do quantitative easing, and they will try to do fiscal stimulus. They'll give people paychecks, and hopefully, people get spending then. But what happens during that process? During the process, when they do that, it takes about 2 to 3 years for them to complete the process of QE, fiscal stimulus spending plan, and getting the actual spending done. If the government is in agreement with itself, for example, if all the Democrats, they take the full control of the government, what you might see is stimulus happening for the next 4 years. So during the next 4 years, you're going to see a debasement of the dollar, and gold and silver prices will go up. It will go up a lot. Platinum too possibly might go up because they're debasing the dollar and they're all priced relative to the dollar. What will other governments do? Well, other governments don't have a choice, right? I earn in Swiss francs. So the Swiss National Bank, if the dollar devalues, The Swiss economy is an export economy. They depend on the American market, so they will have to debase the Swiss franc. And what will the Eurozone do? Well, they're in the same situation as the US, so they will debase the euro. So we have a global devaluation of currencies. How do you protect yourself in that case? Well, I would say in the short term, you need to hold cash because we are the possibility of us going into a crash is no longer just a possibility, it's almost a probability of us going into a crash. During the crash, the dollar will go up. It will reduce the price on commodities. And we're already seeing this. Oil went down, right? You're thinking, well, why is oil going? Well, there's a demand issue, but mainly there's people are just buying more dollars because they're scared. Dollars are a good thing to hold right after a crash. So everybody's actually expecting the crash. They are leaving the stock market. They are probably leaving the bond market, and in that process, it will bring a crash of everything. If you hold cash at the end of the crash of everything, you are better off than people who are not in the crash of anything. Now, why am I saying I've been buying? Well, I've been buying to train myself to buy in the red. That means on red days, when I see things go down, I put a small order, right? I'm not going all in, but I'm putting like $300, $400 into buying gold and silver. And when I have a bit more and I see that there's a new coin now and I have a bit of extra cash on the side, I'm like, okay, I can put a bit more into platinum. I think right now I have a rule, right? Before the crash comes, you should be in a 80-20 position. So what does that mean? It means that in your liquid asset, these are relatively liquid assets. In your liquid assets, only 20% of your assets should be tied up in asset classes and the rest should be cash. That's the short-term strategy. The midterm strategy is once the market corrects, you should go in and buy slowly because you don't know where's the bottom, but you buy slowly, $300 a week, $400 a week. Go in slowly, bit by bit, until you reach the bottom. Bit by bit, until you reach a bottom, and don't overstretch your budget. Bit by bit, buy a little bit of gold and silver every single month. Do like $200. Buy what? Just don't go bankrupt. Don't stretch yourself and go all in and then post on Wall Street bets that you lost $100,000. Right? Don't do that. Don't do that. Just do a little bit at a time. I mean, I didn't buy this in one order. I bought this in. I had one order for this, right? I bought this. This is recent. This is before yesterday. I made an order of these, and then I bought these a week before that. I made that order. I bought these almost a month ago, and then I bought this right a week ago. So I'm going in according to my earnings and my budget. I'm not overstretching myself. This was even before. So this was the previous month before, and I had some other gold and silver. Every single month, go in slowly. Take your time. You're not in a rush. You'll not be damaged. Even if inflation goes up to 10% and you hold cash for a month, you're not going to, you're losing $100. That's it. Let's say if you have $1,000, inflation goes up 10%, you're losing $100, right? These things can correct 20 to 30% in a massive crash. So what do you prefer? What do you want to lose more, right? And inflation doesn't hit that fast. Inflation takes time to build up. And once it's built up and it's rolled, it's very difficult to roll it back. That's the thing with inflation. These things they can correct overnight. So I think you need to, if you're thinking this from an investment perspective, go in slowly, bit by bit. Take your time. Don't worry about it. Don't overstretch your budget. Don't put yourself in into a cash negative position where you have to dip into savings, because one of the most important things people forget is that you need to eat. you need to rent, you need to have a roof over your head, you need clothes, you need to go to work, so you need to pay for transportation. These are things that you cannot avoid and you must have. So you need to have fiat currency. I personally don't like holding everything in fiat currency, but I'm not going to tell you like fiat currency is completely useless. That is just not true. It's just not true. Because if I say fiat currency was completely useless, then what are you being paid at your job? Why would you go to work? You're being paid in fiat currency. You're getting paid in fiat currency. You realize that fiat currency can be traded to other things that you will hold long term, because fiat currency is not eternal. That's the reason, but you cannot forget, you cannot live forever in the future. You have to be in the present, pragmatic, and then also think, okay, in the future, I can't predict it, but I do know that these things are relatively safe. In 100 years, 200 years, gold is still gold, silver is still silver, platinum still platinum, and this thing, it's not paper. It's not backed by the obligations of others, and it's not an IOU. It is money backed, it's commodity backed currencies. So this is my preparation before the elections. I've got a bit more like loose, like 200, 300 pieces of gold, dollars worth of gold coming in. Not big coins, typically small fractional buys that lets me cost average out, and that lets me go in the market slowly, but without actually taking on way too much of my monthly income into this purchasing purchasing action. Do I think in the long-term perspective, are we in a good position? I think I'm happy. I wouldn't be too, even if this goes to zero, it would not affect my other investments. I have other investments. It will not affect my cash flow. It will not affect my standard of living. This is what I've been doing with my spare cash, right? If you have spare cash, do it. And what do I mean by spare cash? I mean that I don't have any credit card debt. I don't have any student loans, outstanding loans. I don't have any consumer debt. I have my assets balance out my debt. That means that if I liquidate all my assets today, I would be able to cover 100% of my debts, right? That is my position. And I am only, I would say, relative asset to debt ratio, my debt is only roughly it's only 30% of my total assets. So I do have debt, but I've put it so that my debt, that this is my mortgage debt, is only 20% of my total assets. So think about that. Think about, like, I am buying gold and silver, but I'm not going so hard in that, if the winds change, I have no maneuverability. That's the thing. I'm retaining a bit of flexibility, and that's the most powerful thing you can retain, is flexibility during times of crisis, so you can adapt to the market situation. And we are going to go into a time of crisis. I did a video on what's happening in Europe. Watch it. Just be aware. Don't stay in good health. Don't panic. Don't overthink things. Just put a bit of money to the side. Put a bit of money into precious metals. Put a bit of money. Buy some physical gold. Buy some fractional gold. That's not too expensive. In the U.S., you have Indians. I've seen on the forums and Reddit that Indians are pretty much selling at a melt. So you have the I think it was the $2.5 Indians, and they're selling at $2,000. $250 to $200, somewhere in between there. So they're at melt value. They're pretty good buys. Just if you don't have a lot of cash to put into gold. And also silver is great because you don't have to tie up a lot of money to get a little bit, right? That was what I wanted to talk about today. Thank you very much for watching. If you liked the video, click the like button. It really helps me out. Feel free to subscribe. Write in the comments I like having discussions going. I want you guys to talk to each other. I've seen like there's a lot of interaction, people of different walks of life talking to each other, having different opinions. And yeah, and I try to reply to every single comment that you post, at least one, at least a top level comment. If there's a discussion going, I'm not going to reply to everybody, but I'll reply here and there in the longer like discussion in the sub comments. I'll read like 3 or 4 and then I'll write a comment. So thank you very much for watching. Silver Dave out.